then we'll talk about a couple more policy impacts. One of the big things that's also impacting the population that is, expanded is the redeterminations. So right now we do this annually, and law now will require it effective next year that these renewals will happen every 6 months. So we'll do them twice a year. If you remember, it seems like just yesterday, but it was maybe about a year and a half ago, we ended the COVID unwinding, where because of the state of emergency that was dictated during that time, they paused redeterminations. And when we did the unwinding, everybody that hadn't had a redetermination, they gave, about a 6-month period for the states to get those completed for everyone. And there was lots of information on the news, communication to patients. They were doing text messages, emails. You kind of saw information everywhere reminding people that you need to update your information, make sure they have accurate information for you so that people don't lose benefits. And with all that communication, if you remember, we still saw bump up in self-pay. People still lost coverage, did not do redeterminations effectively, and people who should have still been on benefits. Every time there is a redetermination, there are people, just because of their ability, we're dealing with some very transient populations. Sometimes they just don't even know that the information comes in the mail. And if their address is not up to date, it doesn't even make it to them, or they just don't open their mail and don't realize that it's due. And so we have what they call the Medicaid churn, where they just expect a certain percentage to fall off. And often they don't even know that they don't have coverage until they present to us as we get to the provider, and then they realize that their Medicaid's been turned because they failed to do this. So now having to do that every 6 months, with that being the new normal, it's definitely going to result in additional people losing coverage. The other piece with that's another area really where we've got to kind of pick up the mantle as a provider perspective to get that information out, because there's not really been a lot of communication about this. And so even as you remember, even with everything we did out of the COVID unwinding, it helped mitigate some of that impact, but not all of it. People really aren't even hearing about it. So oftentimes our patients won't know or expect to have to do that every 6 months. The provision regarding immigrant coverage really is impacting a smaller subset. It used to be that if a person was a refugee or asylee, that they were able to get full Medicaid, not restricted emergency Medicaid. Now it's only if they are refugees and asylees from particular areas are they able to get full Medicaid. All the rest will be limited to emergency Medicaid. But very often, as part of what we do in eligibility enrollment, we very rarely see refugees and asylees that are coming in through that process. That's very, very small percentage. And so don't expect that to be a larger impact on hospitals. And then the other piece is retroactive coverage. So for those, this is impacting now not just Medicaid expansion, although expansion populations are impacted more. If it is a Medicaid expansion application, they will only be able to get retro for 1 month. We used to have 3 months or 90 days for retro. Now that's going to be limited to 1 month if it's expansion, and 2 months for all the other types of Medicaid. So your pregnant women, your age blind, disabled. This is across the board limiting of the amount of time that we have to get our dates of service covered. I have these two provisions here because these are some things that really should happen, but you'll notice the effective date for this first one is not until October 29 that the states have to establish a system. And this is to make sure that people that are deceased aren't still receiving benefits, or people that are getting benefits in another state aren't receiving benefits in your state. These are people that really shouldn't be on benefits, but of course this is one that the bill kicks the can on. You would think this is one of the first ones that you want to. And then the next one, this is a eligibility and final rule was something that was passed several years ago, but it keeps getting delayed. It was to make the process for enrolling in QMB for Medicare beneficiaries, as well as CHIP program for children, faster and more streamlined. And they're delaying that now to October of 2034. So we won't get that enhanced, a streamlined process to make things faster. So the next two are looking at how the states typically help to finance Medicaid. So they kind of work together with provider taxes and state directed payments. Provider taxes are just a tax that the state puts on providers. It can be, currently the law allows it to be up to 6% of the net patient revenue for that provider. And so they can, when they make a payment to you, it will have this tax on it that they get to keep, and they bring it back into the general fund that they use to fund Medicaid. State-directed payments is a way that sometimes they're able to incentivize particular types of care, levels of care, or things that require a little bit more cost. And so there are lots of programs, like if they want to incentivize primary care, they may pay a bit more for primary care to try to help encourage that and avoid some of the higher cost of care that comes in the future. And they would do that by paying a higher percentage. Well, now this bill limits the state-directed payments in expansion states to 100% of the Medicare rate, so that essentially they're making the Medicare federal government kind of the most favored nation. They'll have the best pricing. In non-expansion states, though, they're actually able to have that up to 110% of the Medicare rate. And we've got several programs across the country that had higher state-directed payments that got grandfathered in initially, but they're going to have to reevaluate them to make sure eventually that they meet this requirement. So when these two work together, the state can have a state-directed payment where they pay providers, 10% more. And then they could issue like a 10% provider tax, where essentially the provider doesn't get anything different, but the state then gets that money, that 10% money back that comes into the general fund. Well, they also get the federal match on the amount that they paid you. So when they're paying a provider, that extra 10%, they're going to get that federal match on that comes to the state, but then they get to keep all of the provider tax. So that part doesn't go back to the federal government. And that's how they kind of use this to play play the game with the money, a little shell game to increase some of the revenue that they have to help fund other areas of Medicaid. And that will no longer be one of the things in their arsenal to help fund it.